love that music. It just generates so much excitement and passion in me. How are you today, Mr. Berkus?
And I am doing great, David. Good to see you.
Good to see you. This is David Friedman, my co-host Dave Berkus for TCA Crossroads, where entrepreneurs and investors connect. And I think today we have some really, really interesting data from the ACA and the angel community, from what I understand.
And we do. And before we do, I'd like to brag for a second.
Be my guest.
My new book, The Leader's Toolkit, will be out in 6 weeks. So by the time you hear this and see this, it'll probably be available on Amazon and all the book sellers that you know in hard copy and soft copy editions. And it's a great gift to CEOs and not a bad one for investors. So there you are, David. I gave my pitch.
Well, I'm going to put a shameless plug in. This is your 15th book, and
Yes.
you have been such a great mentor to me. You actually published my book years ago, and I think I'm going to learn by reading your new book even more to be a more successful leader. I think it's not only applicable to business, but also to managing angel groups. I say that because I know we're going to get a lot of interest from the angel groups listening to your great words of wisdom today as well.
Well, they aren't mine. These come from the ACA Committee on Data. John Harbison is the one who contributes the most from the TCA fund.
Yeah.
And then there is Queen City Angels and the Central Texas Angel Network and some others that contribute a lot too. So let's make sure that there's credit where credit is due. And yeah, it is the Berkus Publishing Company, the Berkus Press.
Oh, so cool. All right. I'll bring on your slides and then we can get started.
Let's do it, please.
All right.
The theme for today is basically whether or not angels contribute to the success of a company that it funds. And if so, does board service make that contribution more or less or equally as effective as if there is no board service? And I think you're going to be surprised by these statistics. Again, I gave credit a moment ago to some of the contributors, but this is actually published by the Angel Capital Association. It was published just days ago as we are looking at it today. And it is rather surprising. The conclusion, I'm going to wait and let you kind of come to that same conclusion with me. But let's see what we have here. Number one, if we look at the service for boards, it turns out that in 2022, 66% of all angel invested companies had no board representative from the angel group. That's a shock, isn't it? We'll look over to the right-hand side, 2024, when the last data was compiled, even though it's just been released. And it's went from 66 to 74%, which means the participation of angels in these boards is declining. And that kind of hurts. So if you look at whether or not we're a board member, go from the left-hand side, it's 19%. The right-hand side is down to 13%. But if there is an observer, and many of us have been observers rather than board members, partly because of liability and partly because there are too many people on a board, that number has actually increased by 1% from 9 to 10. So there isn't much to learn about there. But what happens is, to get onto a board, the companies ordinarily require, and I'm not saying that the CEOs require, but the companies actually, in measuring the amount of investment they got, require about double the amount of investment. So board member representation has grown from $150,000 typical angel group investment up to a required $367,000. Kind of a shock. If you look at the green on the left-hand side, David, it means no board. Well, it used to be there would be no board at 74% of the time, and it would be for about $150,000 investment. Today, the no board has gone to $367,000 of investment, still no board. So that kind of hurts.
Is this because we're seeing the asks being so high? For example, in the older days, the asks were in the 500,000, 700,000, maybe up to $1 million. Now we're seeing 2.5 million. So it seems logical that want to keep the board small, but you have to be able to cut it off at some limit. What's your thinking on that?
What a dichotomy that is, David, because these companies require less money to get to market now than they did when they were asking more before.
Interesting.
The problem is that we can spend a lot of time talking about what's happened in the angel community, but the expectation of the companies is higher. They're giving away less equity because the valuations are higher, and that's why they're asking for more money. If they were hurt badly by saying the pre-money valuation is 2 million, and if I ask for $1 million, I'm giving away half my company, almost no entrepreneur would do it. But if they're saying I'm asking for $1 million at a pre-money valuation of 6 million, that's 12.5%. It's nothing. And sure, I'm going to ask for $1 million. So what's happening is the asks are going higher, the valuations are going higher. I don't think they should be, but that's a second discussion we can have. And in the end, therefore, board service is going down. Well, not therefore. There is some therefore is about to come. So this one is the chart that talks about typical venture group portfolio companies with board representation. And in 1997 through 2002, the left-hand side, 63% had no representation. And with venture groups, it is down now to 32%, which means the venture capitalists are becoming more active, not less active, in the amount of board service that they provide. And the reason is going to be obvious when we get to another couple of these slides. In the upper left, the median total round has gone down over these years from 1997 through 2002, which is the upper left-hand blue, to 2021 to 2024. It went from 3,600 to 1,800, a 49% decline. And so the median total rounds have gone down. And if you look at the lower left, David, the median total TCA invested has gone from 1 million in 97 through 2002. That means funding when we first began TCA until 2002, 1 million down to 300,000. We are actually putting only about $300,000 into a typical deal in the last 4 years. And so that doesn't help at all. In fact, it really does make this more difficult to make the case for board service. So here, if we take the next slide, it is adjusted for current dollars. And this is TCA Venture Group investments per company as it declined even more over the past 2 decades. And so if you look at the one on the right, 63% of deals have TCA Venture Group board representatives. So David, if you'll look at this next slide, if you'll see the upper left-hand side, if there's no board member, the amount of investment has declined. As you can see, the median is 525,000. I know you can't read that, but it has declined. And 32% of the deals that TCA has invested in have a board representative, down from a high of about 65% in the early years. That's where the shock begins to really begin to be felt. So David, look at this chart. It's board representation dramatically improving the outcomes and returns. If we look at TCA Venture Group exit probability, go back to the early days of TCA, 1997 to 2002. Turns out that 45% of the companies shut down, 55% had exits. This is back then. That was when there was board representation. If there was no board representation back in those years, turned out 68% were shut down, up from 45. Right away, even at the beginning of TCA's life, it turned out there were more shutdowns if there was no board member, and 32% of the exits if there was a board member. Go to the center chart, and it said again back in 1997 to 2002, if there was board representation and there was an exit, it was averaging 12.8 times the investment. And if there was no board representative, it was 0.9 times on the average. And that is what begins to hurt. The IRR goes from 43% then down to minus 1%. So the shock is Way back then, even then, we knew that board representatives were important to the success of our investments. So let's take that one step further. Check this one. On this figure 10, on the left-hand side, it is board representation by dollars invested. And if you look at the left-hand side, there's no board in, boy, most every one of those, the red. And board members only if the amount of investment was under $300,000. And you can see the small amount of board representation. If you go to the next one over from the left, that board representation increases to about 25% if there has been investment between 300,000 and 600,000. If the investment by angel group is from 600,000 to a million, it's about 45% board representation. And then above 1 million, it usually means the venture people have gotten involved and our board representation goes way, way down. So let's move on and to see what that means as it leads to the outcomes. Now look at this one as to the percentage of the round that was taken by the angel group. If we took less than 5%, that's the left-hand upper side, we got almost no board representation at all. And I can understand why. If we take between 5 and 15%, yeah, we got observer and board rights to about 20% of the companies. If we took between 15 and 25%, we end up at about 45%, either observer or board member. And finally, if we took more than 25% of the total round, we're up to around 50% of board representatives or board observers. I want to speak to personal experience. Most of my money has been made when I and other friends of mine have been on boards. And so even if I'm looking at this subjectively, let alone objectively from these charts, that is a truism and it's a big one. And I'm trying to get across today that we need to find a way of getting our members back onto boards. And we'll see what the actual numbers turn out to be in the end when we get a little further on. Where is the sweet spot for angels in rounds between 500,000 and a million? Well, it turns out that there is that sweet spot. And it's about, if you look at the lower chart, the second one over from the left, 500,000 to a million invested, that we get about 30% of these boards with TCA members and angels invested and on the boards. The next is with preferred equity, we're more likely to be on a board. So look at these four charts. On the left-hand side, if we have preferred stock, it's about 25%. If it's a safe note, we end up, and we're combining again, the observer and the board role. It's down to about 18%. If it's a convertible note, it's a little higher than a safe note. And if it's common stock that we're in, we get almost no board representation at all. That's kind of interesting. We should be pushing for preferred stock investments, not the simplicity of a safe note or the ultimate almost simplicity of the convertible debt. And I don't think we're doing that. And yet here is the proof. So David, what are the key takeaways for this very short presentation? And then you and I are going to have a little talk about this. And they are, number one, board representation leads to dramatically better outcomes. That's 7 times better outcomes with a board representative than without if you're from CTAN in Texas, and 14 times better if you're from Tech Coast Angels or TCA Venture Group. 14 times better outcomes. And yet we aren't pushing for board representation very much. And because we have funds at our Orange County and Los Angeles networks, at least, these are passive investments. And they aren't the kind where people are stepping up to be board members. So there are things that we should look at that we can do to improve this board representation. Number one, bring more capital to every deal by concentrating on fewer but larger investments. Right. That's what I think these charts have shown very nicely. Number two is bring more than just capital. Of course. What have we talked about? We bring more than money. All the things that we talked about for all these years turn out to be very true when proven looking back over a 22-year history, 27-year history. Next is fund a larger percentage of the round. It's a significant difference when we fund more than 20% of the deal than when we fund 10 or less. And so we should be funding more. And if we put more money into a deal, we will fund more of the average deal. Next is syndicate to increase the capital that our group brings directly or indirectly into the round, because we're given credit for that if we syndicate. Next is understand that the sweet spot seems to be a round size of about 500,000 to $1 million. But remember that right now, our round sizes are around $350,000. We're not even at the minimum of the round where we can expect the board seat in most cases. And then next, advocate for preferred equity, not just safes and convertible notes, because preferred equity usually gets the board seat because the documents most ordinarily call for it. And finally, and most critically, most angel groups should actively pursue board representation during negotiations. We don't, and we should. And then finally, emphasize in those negotiations an analysis of the critical role of the angel group and the part that it plays in better outcomes and making sure the deal leads have this analysis in hand when making the negotiation. And that's really all we want to show before you and I are going to take the slide off and talk. And David, if you'll remove the slide. I have stories, you have stories.
I'm not sure some of my stories are not all the positive, even with board representation. Look, I totally buy into the fact that board representation is important. I think there are 2 points that you made that I think we need to get across to our own members as well as the other angels. Number one, negotiate that early because it could be a non-starter, especially in high risk or certain areas where we do have expertise. So what we've been doing in OC, I don't have as much visibility into Inland Empire or Pasadena or LA. What we've been able to do is say up early, if we invest 400,000 or whatever the number is, and that 400,000 is not only TCA money per se, but all the TCA venture group, which includes potentially our strategic affiliates, of which we now have 4, and that's going to increase.
Good.
So let's say, goes back to your syndication comment, the more people we bring to the table, I don't care if it's me, I don't care if it's an LA person, I don't care if it's one of our strategic affiliates, because we're all in lockstep together to make sure we have the best deal. So the interesting thing that you point out is get a board seat, make sure you negotiate up front, and use the power of syndication and your relationships to bring more money to the table to do that. Now, let's go back to 2 other things you said. Number one is liability if you're a board of director. I'm okay with that. If I'm a board of director, I get compensated for that. I have D&O. It's not a big deal. It's just as easy, and I've seen this when I've been on the board observer for like Limber Prosthetics, Limber Therapeutics. I had as much say as the regular board member because I brought expertise to the table and a different perspective. So being a board observer is important, but the board observers have to be vocal. They can't just sit there and watch. In fact, any board observer, I'm a New Yorker, obviously, you can tell by my accent and attitude, but if I'm involved in a board, I want to participate, and my goal is to help them out. They may not like what I say, but I'll play devil's advocate half the time. I want to make sure our money, that my money and the money of our entity is protected. So I think it's important to be a vocal representative, not just have the title, well, you're on the board. So it has to be there. Negotiate up front, use your syndication relationship power, and be vocal. And the other thing that I would say, even if you're not a quote board member, and it worked really well with, for example, Parcel Pending. When Lori Torres set up Parcel Pending, she set up small little advisory groups. I know there was an operational group. I was in the marketing group. And those additional new product advisory panels, the marketing panel, the operations panels, they were almost like coaches in specific areas. It's like your line coach or your defensive backs coach, in football. They're specialists helping you out in certain areas. So, notwithstanding the board comments you made, we totally agree. You can always do other things. And even if you're an investor, suggest, how about if you don't have a board seat, if we can't get it, we will be more than happy to be an advisor to you, no pay, on the advisory panel, to talk about operational issues, or to talk about marketing issues, or to talk about branding issues, or asset management issues.
Very
I
good.
just throw that out because this is so important. And I'm so passionate about having the ability to make an influence and to make a difference on these companies.
So let me tell you a story if I can. I love to tell
Sure.
stories to make points. I was a chairman of a company that we exited in very good fashion, pretty large exit in 2024. And I'd been chairman for well over a decade. And when it came time to negotiating with the buyer, I, as chairman, was in on the negotiation. But it turned out that we investors had a minority interest. Is very typical. It's very rare, in fact, that an angel group, if we haven't had venture investments to follow at least, ever get more than 50%. I wouldn't have expected that we ever would. So it turns out that the two owners of the company before we made our investment had a lot more to gain and had some very specific things that they wanted to have, like ownership of the software, even though we sold the company. Well, that could have killed the deal. So it turns that as chairman, I formed a special committee to just protect those minority investors. We
Mhm.
had to hire our own attorney. The two owners had their own attorney. The corporation had its attorney. The buyer had its attorney. When you add all of that together, the way in which we got a good deal out of this was because the special committee fought for and got the two owners to step back on the ownership of the software at
Good
the
for
same
you.
time as, yeah, at the same time as we protected our interests and ended up with, I don't remember the multiple right now, but it was very high, a deal that everybody could live with that might have fallen apart had the owners insisted on maintaining their position.
So I have an interesting question for you. Is that chapter 22 in your new book on leadership? Because that really gets into the leadership that you need. The point is, you can be a leader by power, by structure, or you can be a leader by being a smart person and making sure things are put together correctly.
Very good. And also,
Again, I'm pimping your book, obviously, because I think it's great.
very obviously, if you've seen the movie before, you know not to fall into the same traps.
Yeah, I get it.
That is one thing that board service helps with a lot. Many of the members of these angel groups have run their own companies, but most of them have not seen much on the outside with circumstances beyond what their company presented to them.
Correct.
If you've been on, in my case, well over 40 boards, it might even be 100. I stopped counting at 40 2 decades ago. So when you see that many very similar situations, you can step in very quickly with some authority and say, this is how it could turn out if you don't listen.
Yeah, so I think the interesting point you raised too, Dave, is the fact that storytelling, especially if you're a board member, can actually help
Mhm.
make it understandable to the owners and to the rest of the board, because people are engaged with the stories. By showing examples how it could happen, you point out potential risks. I'm a big fan of making sure I codify my risk a priori.
Very
And
good.
by pointing out the blind, you want to point out the blind side, and you want to point out the downside, because
Mhm.
I think you need that kind of 360 view of the whole deal. If it's an M&A deal or an acquisition deal only, or a sell-off, you kind of want to cover the upside potential as well as the downside risk. And sometimes you get blinded by the fact that I'm so excited about selling this company, I forget about the other components, or I
I know.
forget about the people, which is really important. You don't want to forget about the people that help you get to that point.
I was chairman of a San Diego company that took an investment from one of the top tier venture capital companies. And when that happened, the board member from that top tier VC really dictated everything,
Yeah.
including a profitable company. He basically said, turn that ship and take this product, which is not really very interesting, off the market and redevelop it for the Fortune 50. And we, this very large venture capital company, will finance you even more when you come back to market in 6 months. And we did that. And by the way, I had a micro VC along with me on the board, and both of us acquiesced when we shouldn't have. 6 months
Yeah.
later, the company demonstrated exactly what this board member had asked for. And I remember as if it were yesterday, quote, "My partners have voted not to put any more money in this company."
Been
And the
there.
company shut down. A profitable company before that statement was made, but just not enough to make that person and that large VC happy. What
Yeah.
would have happened if we had no board representative? Well, I don't know. You can make your guess. But it really requires that we pay more attention to helping the company from the inside rather than just an advisory board.
Yeah, I totally agree with you. I mean, I think that's the real goal of why people want angel and micro VC money. I'll put them in the same boat that we're in. Our
Mhm.
goal is to be, it's just our ethos. Our goal is to help the company be successful. We're not looking at limited partners to jack us up. We're basically looking at our own selves and our own finances that we want to cover. And therefore, it's very personal. And we're not going to do something antithetical to what we want to see as success.
Well, David, thank you for your thoughts. And I hope that the point is really well taken here. That if we're 14 times more effective with a board member than without, why do we just walk away after making an investment and not insist on board representation whenever it's possible to get? That's really the way to summarize this entire conversation.
Yeah, totally get it. I think this is important just to make sure everyone understands correctly. For an investor, negotiate early, board representation, preferably board of directors or board observer. If you can't get that, try to figure out a way to stay active. For the entrepreneur, look at the angel investors, the micro VCs, as really expert people that can help you succeed. Just look at the data. And the data indicates that your company is more successful by 14x if you had this representation by people that are expert and want to help you out. So use it. So I'll leave it like that.
Mhm.
And I appreciate you sharing. I'd like to talk more eventually about the use of boards. I know you're an expert in that area. As you said, you served on many. And then we can get into some of the other aspects in the leadership, which I'm really engaged about. I think leadership is an underdeveloped characteristic of many people, especially in the startup world.
Very
So
good.
I'd like to do that over time. And with that, this is David Friedman with my co-host Dave Berkus. For TCA Crossroads, we hope you have very successful investing, and we hope to see the entrepreneurs on the cover of Forbes magazine. Maybe. We'll catch you later.